Hello, welcome to the show. It's the Money and Markets Show, and I'm Charles Boyd, your host. Quite interesting news within the Eastern Africa, if you to put Ethiopia in the equation. What you're getting from there is that Safaricom Ethiopia has secured about $350 million from the International Finance Corporation, which is the private sector lending arm of the World Bank, to actually expand its operations in that market. Now, this brings the total injection of IFC into Safaricom Ethiopia to about $650 million. Now, this is quite interesting because it's coming at a time when international players are aggressively eyeing the telecom sector in Ethiopia, having been closed almost since the beginning. Until a few years ago, the Ethiopian market, telecom market that is, was closed to external players. It was only government or public enterprises that were allowed to operate in that particular space. And you're talking about a market of over 100 million people. So that's how big this market is. But we'll be delving into that story in our subsequent shows. Once again, it is Money and Markets. First off, Uganda has passed a 72 trillion shillings budget for the next financial year. That's 2024-2025. Now, in this segment, we try to find out who are the winners and the losers in this budget. And of course, we're trying to draw an analogy between the national budget and your household budget.
The budget, it has come in a period of, let me put it into context now. First of all, globally we have challenges now. Productivity is low globally. The price fluctuations are all about. In terms of inflation, the central bank is trying to manage here, but also globally we have those challenges. So when we come down here, and the biggest challenge now that we've been having, of course, is the debt issue. Our debt to GDP has really increased beyond what the IMF had actually recommended. So our country faces a tough time, a tumultuous time right now. And now our leadership is left with saying, how do we manage this? Our aid has drastically reduced after the AHA bill. It was at 2.1 trillion development aid. Now we're at about 280 billion. You can imagine that whole change. And so even with the taxes that are trying to come up and catch up, see how we can collect more domestic revenue to meet the items of the budget, you can see even the recent ups and downs that we've been having between the taxman and the traders. It is a tough time. And the way the budget also now came in to be the final process, how it skipped the processes of the budget also has become another challenging issue, because Parliament the other day, they had agreed on about, was it 58? Now the budget is at 72 trillion, and it says it was passed in an ad hoc way. There is a bit of reason to worry. But my mantra is, once you know there is a challenge, then probably you start to think of how you prepare yourselves. Yes. So the budget is, to me, we are in a complicated situation, and to really the trickle-down effect is going to come down to the last person. The one thing that I actually can confirm to you is that our technocrats know what they're doing. If you look at the documents, the measures that have put in place, very wonderfully worded with all the right jargons and all the right, technical terms. But when it comes to the real work, you find there is a challenge. You've mentioned a very important point. Over 31 trillion is expected from URA. But from where is that money going to come from? That's why now there is pressure on URA to tax and make sure that the small taxable base that we have here can also be maximized. Then and you find that you will engage these people. The technocrats will tell you the politicians are saying this. The politicians will tell you. Everyone is running off from responsibility. And that's why the president is now on pressure. Because the people that work with him cannot have the answers. Everyone runs to the president. And I think it's going to be a tough time for him also, knowing that that money, in a time when we're struggling, business is struggling. I was seeing the papers the other day. Our big tax payers, those who are paying at least 500 million and above, have reduced by over 93%. So that means now it is the SMEs, FSMEs that are going to have to bear that burden. And yet they are also being crowded by some of the policies that are being moved around. So there is going to be a challenge. The technocrats, we could talk to them, they will respond to us. But I think fundamentally we need an alignment around all government agencies. And this is going to be really a burden on the president, because the MPs, the legislators, the technocrats who are in the ministries, they don't have answers. And you spoke about the budget. If even you look at the areas that we are putting most of our money in, they are unproductive areas. Areas to do with administration, to do with some projects that do not have an exact return. We would rather be investing in areas that actually are productive, what you said. Instead of relying on the less than 10% tax base that we have here, how can we increase it to about 30% so that the burden is lessened on the people who are bearing the tax? It's going to be something that we should look at, the whole ecosystem should look at and see how do we decrease the informal sector? What are the factors that are making these people refuse to go into informal business? And taxes is one of them. And actually, even these taxes, we look at them, they are not as unfair. They're usually taxes on income. It is an issue of people understanding what is taxable. But of course, the traders and the business people also want to be tax-free. There's this phobia that is there that once a taxman comes, your business is gone. And yet the taxman is also not against your business. They're against, they just want you to contribute to the national platform so that we can be able to access these facilities. The winners are people who are in the climate and the climate movement and environment. Because green production. Yes, I saw there were some good offers both at the budget but also in terms of the allocations. I think those are going to do well. We do have, of course, relatedly, the solars and all that in terms of VAT has been removed. But I see, for me, in this whole budget process, still, the wins are few. The wins are few. A lot of a chunk, if almost 30% of the allocation is going into debt repayment. And then we have recurring costs that are also a very big chunk. The wins are really limited, but the people who are in that area, renewable energy, climate change, there is a win there. And how we adjust to this is, I was seeing even the electric vehicles and all that, there's money being put there, but there's only, of course, one company that is dealing with that. But yes, if someone wants to venture, then that's a very good place to go into. But mostly, like we said, a bigger chunk is going into consumption. A budget is simply about your expenditure and your income. So if you're earning more than you're spending, you're at a good place. If you're earning exactly what you're spending, you are at a line. If anything happens, a shock happens, you go down. If you're spending more than you're earning, you are headed for trouble. And there's going to be a place where you're irredeemable. So just like we are seeing at national level, we are truly spending way more than we are earning. And now it also, I think there is a relationship. I'm trying to do some study about the relationship between your national behavior towards the budget and the citizens themselves. I think there must be a correlation. Because if you saw the last FinScope, and this raised some eyebrows, over 70% of Ugandans are living beyond their means. That is very bad in terms of financial health. Because it means when a shock hits, and 93% of Ugandans have experienced a shock in the last 12 months. A shock can be death of maybe a provider in their family. It can be like COVID hit. It can be, something happened, agriculture based, so the season can be bad. Okay, the death of a business. So if that happens, we are headed for trouble.
We know that it's a tough time economically, not just in Uganda, but globally. And in these times, it's very important that you take certain counsel on how to manage your money. Now, in this segment, we again share with you certain tips on how you can make and then manage money, whether as business or as an individual.
Many people are in business, but they have failed to know what they call uniqueness, what we can call niching. Branding and niching is not about money. It's what identifies you in the market or among the segments of the sectors you're competing with. So when you talk about niching, it's coming up with product identification. What sells you, your branding, your marketing strategies. The marketing strategies we use in business also bring our uniqueness. You cannot be a businessman, you are marketing your business, then you're throwing money in the air. That strategy is wrong. Economy needs money, but somebody is throwing money in the air. Your marketing strategies have to have the uniqueness. Which type of tool do you use to market your brand? Are you using the magazine? Are you using the TV? Are you using the social media? Because with your marketing strategies will bring your uniqueness in terms of customer identification.